We all like that. No, it's good. Okay, we gotta get going here.
All right,
Ready?
yeah, we gotta go trick-or-treating.
Yeah. Here we go.
Ready, Teddy?
Welcome. You're listening to the Best of Investing on Talk 910. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. And for those of you listening for the first time, here's our format. A few guys and a gal sitting around a bar having drinks without the drinks, talking business with you, the audience listening in. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender, and Julie Kennedy of Modern Marin Real Estate.
Marin Modern.
I apologize. Marin Modern Real. I even have it written down here. And Robert Schiff of RPM Mortgage. Our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. So that's right, we're giving away 3 vacations during this show. The vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. The vacations are free. They'll only request a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. Today's trivia theme is the word dog. Okay?
Dog.
Dog.
You dog.
You dog. Okay, our website is bestofinvesting.com. Check us out on Facebook and hit the like page, or like whatever icon it is, I guess. And YouTube, we are on YouTube by typing Best of Investing Radio Show. We're also on television, Comcast Channel 26 and AT&T Channel 99 on Saturdays at noon and Sundays at 6 p.m. Now, Julie, we're going to get right into you because you've got a pet peeve you want to share with us.
Well, I do, and it's partly I'm to blame because I'm just a trusting realtor. But I recently had some clients who were relocating from out of the area, and I had been emailing, chatting with them over time. Finally, the transfer came through, and family moved out here. We had all this time set aside to look at property, but for a variety of reasons, that first week didn't work, which I respected, although I didn't meet them, sent them to a few properties. There was one that they actually liked, and I was in the midst of doing quite a bit of research at the town of San Anselmo about a particular issue with the road, and I got an email saying, thanks, but no thanks. We found another property with another agent. We made an accepted offer.
Ew, I bet that happens a lot.
Now, were you representing them as the buyer?
As a buyer's agent. Now,
but there's no contract, though, right?
well,
Years ago there was years ago it said if you were the one that initiated, then they were your client.
Well, that's
they
procuring.
changed it because that was something that was guaranteed to have an incredible amount of lawsuits because somebody would work with them and you say, oh, I met them 3 weeks ago at United and said, oh, you're going to buy a house, here's my card. So I was a real estate agent for years before I became a mortgage broker. And so this was back in the 70s. They changed it to if you close the deal.
1870s?
No,
I just teased.
What did you say?
I
can't hear you. So then it changed to if you're the one that makes the deal, then you're a client. There's no, unless as one person I know in Sonoma only works with buyers. He has them sign a contract.
Just like a listing agent for
He's
selling.
a buyer's agent only, and he will only work with people that sign a contract that says you are going to buy a house and pay me a commission.
Whether I find it, you find it, or the dog next door
Looks
finds it.
looks like Julie's holding one of those in her hand.
Well, actually, I am. This is the buyer representation agreement, and it's something that we agents talk about all the time, about having our buyers sign. But generally, when I work with a client, I let them know that I'm giving them 100% of my time and attention. Plus, I have a partner, so they're getting 200%. And I expect that in return, the loyalty.
Yeah.
And again, I think that using one of these is great, but it happens very rarely. But when it happens, I feel shame on me that I didn't even broach the subject.
But isn't it difficult? I mean, I understand all the positions, and I, as a realtor, was faced with similar situations before, and I contemplated using a buyer's contract, but I felt like, and This happened to me as a buyer back in the 1960s.
In the 60s. Holy smokes! Did he even have
Where
houses back then?
somebody worked. I was very naive, and somebody worked with me a long time, and then I called them on a Monday and said, I found a great house, and I want you to work with me. And he says, well, what happened? I said, well, I went to the listing agent, we wrote up a contract. And he said, no, then I can't help you. And it wasn't, I didn't understand it at the time, because I had done what these people did to you inadvertently. And so I contemplated, as a realtor, should I use a buyer's contract? And I thought, when I was a buyer, I wouldn't have wanted a realtor to say, I'll work with you only if you guarantee that you will work with me.
Well, it's frustrating because then that means, like, you know, you're not going to go to open houses yourself or do any legwork because you're going to feel like, hey, this guy's supposed to be doing that. But what about also, like, you're in the mortgage business? And in theory, I guess it's the same sort of problem, right? Someone goes ahead and...
Except there's no such contract in the mortgage business that you can
No.
sign.
I'm talking about just the idea that someone could be working with you for a long time and then say, thank you, but I've decided to go elsewhere, or...
I've heard of that happening to people.
But once they work with Robert Schiff, they don't want to work with anybody else.
Well, actually, I'm fortunate enough that I've been on the opposite end most of the time when clients will go to unnamed large institutions and get frustrated and come to me afterwards. But yeah, I can have somebody working with me, although I don't think it's happened that we go through the whole process and they say, oh, my cousin just got his license and we're going to use them instead. If that happens, then it means I'm going to get the loan after they waste their time. Nothing about your cousin, please.
Yeah.
So, their cousin Bernie.
So Julie, what did you learn from that? I mean, that's going to happen occasionally unless you make people sign a buyer's contract.
Well, I think what I should have done in retrospect is I just should have made the statement that I would like an agreement, a verbal agreement with you that you will work with me exclusively.
Well, I'll tell you,
And you don't get it if you don't ask.
Well, I'll tell you what happened when I was, you know, I do a lot of insurance work also. And I had the situation where I had filled out everything in the life insurance contract. And then for whatever reason, the guy thought it was like buying a home appliance at Sears or something. And he just walked into somebody else who happened to work with the same company. And the person just basically scratched out my name as the agent, signed it, and basically, you know, and the guy didn't understand that was, well, the agent knew it was unethical, but the client didn't really understand. Like, oh, don't you all just kind of share in everything? I mean, a little bit silly, right? And when I talked to the other agent and I found out that this was going on, I said, well, how much are you going to give me since I did all the work? And he goes, nothing. And there was nothing legally, there's nothing I could do.
You were agents with the same company.
Well, we just, the way it works is okay, when you're licensed with, let's say, Coldwell Banker, that's who you hang your license with. As an insurance agent, you can hang it with multiple companies. So we just happen to hang it with the same company. And so I gave him my famous line, didn't your mom ever teach you the difference between right and wrong?
And how'd that work?
I'm still waiting for my check.
He has a good dentist.
Well, as you know, in private money, I have a form that sometimes, depending on the situation, I'll ask the borrower client to sign, which is basically an agreement to pay a commission if I procure him a loan under the terms and conditions that he's asked. And it is a legal binding contract. The problem is that I need to go sue the guy over it, and who has the time? And I just would, you know, it's easy. It's better for me to just continue on.
Yes,
with my
and
business.
also that contract is just saying if he ends up using you, whereas the similar thing in real estate would be saying if I buy a house and use you, then I'll pay you.
Well, I'll tell you,
it's not binding because they could go.
When I was doing hard money loans, we went one step further. We actually required them to give us a deposit. Now they had to trust that we were scrupulous,
which is
we
now
were.
mostly illegal in the state of California.
Okay, but it used to be legal though.
Well, no, yeah, now, well, and depending on the type of loan, you were doing commercial loans.
We're not doing
that's still legal.
Yeah,
but
it's still legal.
if
Yeah.
it's a residential 1 through 4
no,
transaction,
we
we're
weren't
not
doing
allowed
that.
to collect. So
No.
So
We're doing
just,
commercial loans, and what we would do is, and a couple of times, what ended up happening was we ended up keeping the fee because they didn't perform in time and they lost their deal.
The
And
large
we spent a lot of
banks
time.
have an application fee. Many of them.
Okay. All right, we're going to have to cut to our first commercial break. Again, the theme is the word dog. Coney Island claims to be the home of what American food? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Coney Island claims to be the home of what American food? 888-912-1190. Make sure to include your name, your email address, speak slowly, spell out your email one letter at a time. Don't touch that dial because when the best of investing comes right back, we've got some very interesting emails for all of our hosts here. Okay.
That was lively.
Yeah, that's good. That's what we want. Good radio.
Yeah.
That's all we care about, right?
That's right, good radio.
All we care about is
banter,
that,
right,
and,
the
and,
banter's
and
the-
rubbery
I
pens.
can't- and I can't do that.
You can't do this?
He and his wife
Yeah,
had worked
just keep
with
it
them
loose.
for 6
Maybe my
months.
pen's not
They
long enough.
wanted to fix it
No,
up in the
that's
middle
close.
of
No, you
Fairfax.
gotta just
And
kind of
I
let it.
looked at
Whoa,
red
whoa,
carpet.
whoa, whoa.
Oh, I remember it. Did you have a
Hold it a
blazer?
little bit more.
Or did you have one?
Actually,
No,
I'll
I
do
just
that.
Phil.
I wouldn't wear the
Yeah,
blazer.
actually, you can
So
almost,
he
almost do it in the
called
middle.
on Monday and said,
Okay.
"Oh, we
Look
found
at this
the perfect
rubbery
house.
pencil.
We wanna,
Holy
have you, work with us."
Holy smokes,
And I
it's
said,
rubber. It's
"What
not rubber.
is it? I've
Now
shown
it's
you
rubber. Holy,
Right.
And
look at that.
Welcome
you
to
know,
the best of
you know,
writing.
Fairfax Fixer Upper. What,
The best
what
of
is it that
magic.
You made an offer? Yeah, well, you made an offer. You're working with the agent. I can't help you, but where's the house? He said, "Oh, it's a perfect house in Balmain Keys with a boat dock." And I started laughing. And he said, "Why are you laughing?" And I just said, never mind. I hung up and told everybody, and I said, "We always said
Right.
buyers are liars." And I thought, what a gift.
It just
And
happened.
they weren't lying. They just had no idea.
That they didn't know too that they
Right.
wanted to live
In the hills of
Perfect
Fairfax.
clients for
Yeah.
6 months showing them houses in the Fairfax Hills of Fixer Upper. And one day after 6 months, they called and said, "We found the perfect house, and we want you to work with us." And I said, "Well, when's the offer?" "Oh, well, we made an offer with the listing agent yesterday." I said, "Well, I can't work with you then. He's your agent." "But what house is it? I know the whole market." He said, "Oh, it's perfect. It's in Balmain Keys with a boat dock."
That's
And
in
I
Fairfax.
started laughing. So it's so
outer
funny.
Fairfax, outer Bay.
Outer Fairfax.
So then I knew, they always say you save the best house for last, and you never tell the client you're going to hate this house because that inadvert always is going to be the one they love.
Of course. And the first offer is usually the best one, right?
Exactly. Precisely.
Okay, Robert, you are going to be the crystal ball guru here.
Well,
Ready? And away we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf, Julie Kennedy, and Robert Schiff. When we cut to the first commercial break, we asked this trivia question. And again, the theme is dog. You dog. Coney Island claims to be the home of what American food?
Hot dog.
Coney Island hot dog.
A Coney Island hot dog. Yeah, we would have
Not just
accepted
any hot dog.
Yeah, we would have
A
accepted
Coney
just
Island.
hot dog. Okay, Robert, an email that we received for you. How long do you anticipate rates to stay low? Because apparently rates dipped down a little bit.
Rates, well, I've been in the business for several decades, and rates have been low for the last year
Yeah, we
or
already
two.
said since the 1870s.
Yes.
right?
but really, I mean, generally, historically, anything under 6% is low. But
That's true.
were I a client today, I would say, "Come on, Robert, I don't want to hear that. I want to know, can I get the best rate in the market today, and maybe even better if I work with you," which is what everybody would ask. And interest rates for 30-year fixed conforming loans were as low as the mid threes, 3.5%. Everything that they tell you is always with no points, just a 30-year fixed loan, no prepayment penalty. And after the Fed, now about 3 months ago, said that at some point they were going to take their foot off the throttle and ease off of buying mortgages every month, interest rates overnight shot up almost 1% to 4.5%.
That's a
Huge,
37%.
big, yes.
that's the day I decided to refinance.
Oh, okay.
Of course.
Over since that time, the Fed has realized when that happened that they can't do that yet. The economy is not strong enough to withstand that, so they're in a bind where some parts of the government, some parts of the country say you can't be doing this. This is inflationary. It's a false market, and However, by doing that, they're helping keep interest rates down, keeping the stock market up, and boosting the economy. So if they were to cut out, now they've scheduled it to $85 billion a month to support the mortgage industry,
So
which is enough. So the interest rates have slowly come down from about 4.5 to now back into the threes, the high
That's
threes, probably 4% or 3.875, depending on if you're getting cash out or what. That's always depends.
Yeah.
Whatever.
So I read in a real estate blog this week that it's widely believed, I don't know who widely believes this, but it's supposedly widely believed that the Fed will be unable to begin tapering their massive bond purchases until at least June of 2014.
Well, they're already saying after the first quarter of 14, and the assumption. It's funny that when they recently said, well, we won't do anything until after the first quarter of 14. Yesterday, the stock market went off 100 points. And the stock market is so
Forget about those
nebulous.
guys.
But yeah, the interest rates, from what we can tell,
Pay no attention to the man behind the curtain.
Yes, indeed.
because he isn't paying attention.
That's right.
Yeah, we do think that interest rates will stay sort of in the range they are, the high threes for a 30-year fixed conforming. Now, there are changes always coming down the road as different parts of the Dodd-Frank law come into effect. And one of the things is the Fed, the Congress wants the Fed to get out of the mortgage business, and they'd like to find a way to do that. One of the ways to do
Without
it
destroying
is
the
to
real estate
lower
market.
is to slowly lower the loan limits. Right now, it's $417,000, and if you're in a high value market like everywhere in the Bay Area at 625, they're talking about lowering that back down to 400 and 600, which isn't a big lowering, but it's a lowering, and that would slowly weed out some of the people and make them slowly have a smaller percentage of the market.
Interesting.
Well, the idea that mortgage rates can be expected to remain in that range between like 3 3/4 to 4 1/4 for the next 6 months. I mean that for me, I know that people that I know who are in the home buying and don't want to buy a home now, but are thinking of it after the holidays into 14. That's great news, because I think there was a fear for a while there, a couple months back, that gosh, were we going to be staring at 5%
yes,
and
that it's
growing?
all over.
That's
it'll
all
just
over,
go,
right?
Go.
Right.
And so now we're in that. I don't know what to call it. It's not stagflation, but the economy
It's a
after
sweet spot.
3 years still isn't strong enough to sustain mortgage rates without support. So, and it looks like that will stay that way. The real estate market has calmed down a little bit, which I think is healthy, because it was really overheated.
Yeah.
Multiple offers, and I won't look at your offer you send me to, unless you send me to Hawaii or whatever. It's calmed down to that one of the title escrow officers said years ago, the anomaly of a normal market.
Well, Robert, you're kind of a smart guy here, and I'm sure you're quite creative with clients who call you and try to get the home mortgages for them. How do people get a hold of you?
My name is Robert Schiff, and my company is RPM Mortgage. We're a private mortgage bank, and actually I'm now one of the 10 largest in the country. The best thing is to go on to RPM's website. We have a lot of very interesting information, and you can contact me through there, or alternately call my cell phone, which I always have attached to my body.
Even at nighttime.
415-515-1941.
515-1941. That's a good phone number. Okay,
It was a very good year too, right?
Yeah. Julie, we're gonna go. We're gonna move on to you right now. Real estate as a home versus investment, including Bay Area real estate cycles, and we'll go talk beyond Marin, because this is an international show. No,
Yeah.
it's a show that carries
Bay Area
beyond a Bay Area. Yes.
Well, I could even talk about Danville, Illinois, if you'd like, but
Well, we have Danville, California,
Yes.
listening.
well, but that's part of my story. I have a good friend who grew up in Illinois, and her grandfather was a very wise man, and he counseled her about real estate. And he said, if you buy a house and live in it for 30 years and sell it for what you paid for it, you've essentially lived in it for free. what a concept. These,
What about the time value of money and the down payment
Well,
and interest rates and what else? The
he wasn't
opportunity
that
cost.
he wasn't that wise.
He was a renter.
Isn't that wise?
But essentially, what he was saying is that you're not, if you don't lose any money at the end of your time in this
Yeah.
home, you've had the benefit of a lovely home to shelter your family and create memories in. But when we started to see this rise in equity and people were using their homes to finance everything but just living in their home, that really changed.
Well, I was going to say, because
So-
otherwise what I'm going to do is the guy who bought this home 1960 for 20 grand, I'm going to go offer him 20 grand for that house now. And I'll offer him 21 grand. Go, look, you made 5% on your money.
Right, you
Well-
have to live it for 50 years? What do you want? For
Yeah,
that?
exactly.
Yeah, but I mean, obviously, those days are no more. But I think the idea is that we've gotten so accustomed to viewing our home as an
College
investment.
tuition.
Yeah, and it is.
Right,
And
and the boat payment.
it is your biggest investment, but it's more than just that. It's like the difference between. That's why it's real estate. It's you're living in it. You've got something tangible as opposed to investing in the stock market, which is just pieces of paper essentially.
Well, I think the jury's still out too. We had this heated market right for the last year,
Yes.
and but I don't know that anybody's crystal ball is really clear right now. And I mean, are we guaranteed appreciation in the next year or two, given what mortgage rates may or may not do? I mean, it's a very much
Well,
an open-ended market, a big question mark. Right?
Well, California Association of Realtors has a fabulous woman, Leslie Appleton Young, who does forecasts. And the forecast for 2014 is a continued increase, but not as great as it was, at least through the next.
What numbers have you heard? Because I've heard like 5-6% predictions. for
Anywhere
14.
between 3 and 5. But
Okay.
again, we go back to just the Bay Area. We're
Yeah.
looking at a much
And I
higher.
think the hyper fast hot real estate market was partially due to the incredible decrease in values that we went through in 08.
Oh yeah, I think there was a rubber
Mhm.
band effect maybe
Right.
too.
I mean,
that
I
kind
know,
of
Mark,
bouncing
you
off the
had
bottom.
clients who were investing with you and borrowing money from you and buying houses all over.
Yeah.
The idea that they're so low now that they were 500,000 in Sacramento, whatever. Now it's 200, and within 1 year it'll go up 300, and they could make incredible profits. I think
And that's what happened. I
Yeah,
think,
that's
a lot.
what happens. So,
Okay, with all this intellectual stimulation of speaking, we have to cut to another commercial break. Dang. All right. Okay, when we come back though,
Gotta pay the bills.
Dog.
We've got to be the dog. Yes, that is the theme, dog. Now, before we do, last week we had a special trivia contest where the winner won a beautiful 2-night stay at the beautiful Hyatt Regency in San Francisco. Okay? Hyatt Regency San Francisco is the city's only luxury waterfront hotel featuring the Guinness Book of World Records largest atrium. You guys ever been to the Regency?
I think I went into labor there.
I mean, it's beautiful. Okay.
That's another story.
That's another story. Okay, the hotel is convenient to all San Francisco's greatest attractions, including the ferry building, cable car line, Bay Bridge lights, and scenic waterfront. Check them out at sanfranciscoregency.hyatt.com. The question was, almost 20% of us buy this but never use it. What? The answer? Prescription drugs. And our winner was Janice from San Francisco. Well, she must have a lot of prescription drugs in
I
it.
thought it was a toothbrush.
Yeah.
Oh.
No, that was for our friends in Mississippi a couple
Good.
weeks ago. Okay, here's our second commercial break trivia question. In which season, remember the trivia theme is dog. In which season of the year would one experience the weather pattern known as the dog days? The first 3 callers with the correct answer win a free 3-day 2-night stay at the Lighthouse Resort. Remember, there's only 4 seasons. You gotta choose one. Their website is lighthouseforfun.com. Call 888-912-1190 to answer this question. In which season of the year would one experience the weather pattern known as the dog days? Call 888-912-1190. Make sure to include your name, your email address, speak slowly, spell out your email 1 letter at a time. Don't touch that dial because when the best of investing comes right back, we are going to have a very interesting question for Mark Hanf.
Summer?
Yes.
That would be Attica. Dog day afternoon.
Oh,
yeah.
Attica.
Attica Finch. No, that's
prison.
No, that's
So they're saying now that eight out of 10 buyers are home owners instead of investors. That has
Yeah.
really shifted.
Yeah, that's great.
Or
8 out
Buyer-
of 10
home
purchases are for
Homeowners.
residences.
okay.
Principal residents.
At least that's
Fine.
what they're saying.
Mhm.
You know, from my limited experience with the people in my office and the market, that's what I see. Although one of the deals, because I just had somebody that took their pension money out and bought an investment property, but that was because they wanted a place for their kids to have. So
Oh, nice.
generally,
Would they like
Don't
to
bug
adopt me?
Don't bug you? I gotta go to the restroom. Sorry.
The dog
I shall
room.
be right back. The dog room, yes.
The doldrums.
Should be right back. Keep the camera rolling.
I am.
Sorry,
Looks like I got a bridge loan from Rick Warner.
Really?
Yeah, well, he over the last couple of months, I've sent out a couple of pre-approval letters. Hard money pre-approval. Not worth the paper they're written on, right? Just because you gotta have it to make the offer, and usually it never comes back. They just sent me an email. He calls me frantic this morning. I need a pre-approval letter right away. He just happened to catch me. I was in front of my computer. All bing, he gets it. He goes, "Thanks, Mark. We got the offer accepted."
all right.
So $460,000 bridge loan.
Why is it a bridge loan?
Well, it's well, we just refer to it as a bridge, but it's
They're
it's
selling
it's
it, they're
right.
selling
It's a purchase money loan for an owner-occupied residence that she'll be able to pay off within a year. So we read it for 11 months. And
Oh.
you qualify. It's not a covered loan under the regulations, meaning we can do interest only, short term. Otherwise, we don't have to underwrite the income and all that other stuff.
How do you make it that?
Sorry.
How do you make it that it's a bridge loan instead of a first mortgage, which would?
Oh no, it is a first mortgage.
But I mean, it's
We just call it bridge because bridge is short term. That's the only. So that's in different people use bridge, the term bridge to mean different things.
how long do you think most of your loan takes on average? Some of them go on.
On these on the probably about 4 to 6 months they pay it off on average. In under a year usually. So and we do maybe 2 of these a month.
Or often when someone's got a property that hasn't closed.
Yeah, well, so in this case, she just put her existing home on the market. She really wants this other home. Her down payment's tied up in the equity in her existing home, so she actually wants to
About that, am I fine?
financing loan for the acquisition of the target. So she's buying it for $460. We're going to make her a $460 loan and then cross it with the existing. So now on this one, because Rick was really pushing, he got me to do a pretty aggressive fee structure, a lot lower than I would normally do. For something like that with cross collateral, I would usually try to get 10 and 3 or 10 and 2.5. I'm going to do this for 9 and 2. So
9 and 2, that's no.
yeah, so I have to sell it for 8.5, which I'm sure I'll
9
be
and
able
2
to
is
do.
11.
Yeah, that's right. But yeah.
They have to pay the 2 points every month, but they don't pay it back. Like real low sharky. Okay. Right?
Yep.
Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hanf, Julie Kennedy, and Robert Schiff. When we cut to the second commercial break, we asked this trivia question. Again, the theme is dog days. No, excuse me, is dog. Okay. In which season of the year would one experience the weather pattern known as the dog days? Julie, you know the answer.
Summer.
Summer, the dog days of summer.
God, that was so hard.
Well, I don't know. I guess it wasn't that
Throw
hard.
in cream puffs to the audience.
He knew I was coming, so the questions.
Yeah, the next one's actually even more of a cream puff. Okay, Mark, trivia question we received for trivia question. Excuse me, email we
Take that
received from you. Yeah. Spell dog. No. Okay.
G-O-D.
Yeah, there you go. That's an old. There's an old.
I know, that's an old.
That's an old thing. Okay.
I'm messing you up now.
Yes,
Now
you
we're
are.
in vaudeville.
Yes. Okay. Why is it better to invest in your mortgage fund versus an individual deed of trust?
Well, that's a great question. So, my name is Mark Hanf. I'm president of Pacific Private Money. We are a hard money mortgage lender, also known as a private money mortgage lender. We make loans to real estate investors in the Bay Area and have been doing so since 2008 when the bank banks pretty much stopped making those loans. We've done about 600 loans over the last 5 years, most of them to real estate investors buying, fixing, and flipping short sales and foreclosure and REO properties throughout the Bay Area. And the majority of those loans we have funded through individual capital, individual lenders who have enjoyed high yields on their savings by using their money to fund these real estate secured loans. The max LTV loan to value on most of these loans has been right around 65 to 70% over the last 5 years. It's crept up a little higher now that valuations have stabilized and are on the upswing. So it used to be 65% was the max loan to value. Now it's 70. Sometimes on a case by case basis we've done even 75%, but that's really on the high end of the types of loans we do. So with that in mind, the question was, why do you think why is it better to invest in a mortgage fund, a mortgage pool fund, than an individual note? So, little background: in the beginning of 2013, we engaged a consulting firm to design us a mortgage pool fund that would be optimal for the type of Bay Area loan requests that we get, and also given the fact that the Bay Area has some of the most competitive hard money loan rates in the country. In fact, even though you might think paying 10% or 11% for a hard money loan is a high rate of interest. If you were at Phoenix, that would be a bargain because they're at 13 to 15%. Atlanta, Georgia, 13 to 15%. There are parts of the
Detroit
country
is
where
113%.
I talked to someone in
18%.
Washington, D.C., and he said 16%.
Yeah,
I said,
absolutely.
I
And
can tell
5
me that,
points.
I'll hang up and make a call to somebody else. And he said it'll be more.
Right. So our loan rates are, on average, 10 to 10.5% and 2 to 3 points, which again is not bank money, but again the banks aren't making those loans, so you can't compare it to a bank loan because you can't get it from a bank. It's really the only source of funding available for most real estate investors is to go the hard money or private money route. So we launched a mortgage pool fund in 2013, and the reason we did is because we've started getting more and more and more inquiries from potential investors who want to earn a higher yield on their savings. And the truth of the matter is, investing in individual notes is really not for beginners. Investing in individual notes is really a game for people who are experienced in real estate. Most of my individual note investors have been doing it for a number of years. They're very well heeled. Many of them have anywhere from $5, $10 to $20 million at their disposal, which they invest in these individual notes, and they can make decisions very quickly. It's a highly competitive market. You normally have to fund within a few days. You have to make decisions very quick. And so for the average investor who has not done that, but they're intrigued and attracted by the high yields that you can get in this business, individual note investing is not for you. However, the investment opportunity, the tool of the mortgage pool fund is where you can essentially write a check to a fund which becomes like a mutual fund of real estate secured notes. And so it's just a more efficient model for both myself as a loan originator, and now I've got a bank of funds that I have control over as a fund manager that I could use to fund the best loans that we see come through our office. And that in fact is exactly how we designed the Pacific Private Money Fund, is to basically have first look at every loan that comes through our office, and assuming that there's money in the fund, if there's a good loan coming through the pipeline, the fund will be the lender on that loan.
What's for this person who sends the email in, I'm sure they're interested in the rate of return. So what kind of yield is the fund giving?
So we're targeting a yield between 8 and 9%, and for a passive investment, you just can't beat that. And again, it's secured by real estate at conservative loan to value. So we just cut our third quarter checks for 2013, and it was at an annualized rate of 8.9% for the quarter. And the average loan to value, the weighted average loan to value in the fund right now is 55%. So that's very conservative.
Mark, what is weighted average?
Weighted average means you take the total value of the real estate as it compares to the total value of the loans that are made. So there's 12 loans presently in the fund, and So
So
the total loan amount divided by the value of the property. So that's what we call the weighted.
And are each individual loans limited to a certain loan to value?
The highest loan to value in the fund is 75%. The lowest is 24%.
And do you think that is there reason for an investor to believe that it'll stay at 75% as a high and not go higher?
Other than
documents,
there's the fund is managed by a private placement memorandum, and so that in that document it talks about the terms and conditions, the restrictions on the fund manager for the types of loans it makes. So yeah, the intent certainly isn't to go out there and make 100% loans. In fact, we would never do that, and as the fund documents are the overriding document for the types of loans that are made there.
Because I know when people do individual loans, they are the bank and there's certain security in that, but those loans, like you said, tend to get paid off in a short period of time, and although they've been making 10%, suddenly they have the money sitting there idle, and it's getting harder and harder to find decent deals to put that money back into. So in certain senses, the rate of return they'd be getting on the fund, although it might be lower than they could get in an individual loan, might at the end of the year being at least equal to or higher, and they wouldn't be continually fighting to find the next deal. That would be your problem.
Well, that's exactly right. So the reason to invest in the fund is so you don't have to compete with other people for the best loans, and then oftentimes you're looking at loans that aren't as good because the best loans are going to a particular broker's best clients. Another reason to invest in a mortgage pool fund is your investment is diversified over all of the loans in the fund. The fund manager takes care of all the aspects of the loans, collecting the loan payments. If there is a foreclosure, which is a very, very low rate of foreclosure in today's market, the fund manager takes care of all that. So it's a passive investment. It's like a mutual fund, like I said earlier, of mortgage secured notes. You get to write a check to the fund and enjoy your returns. You don't have to worry about early payoffs.
What's the average check that your investors make?
Well, the minimum investment in our fund is $50,000, and we're only allowed to take money from accredited investors. And the definition of an accredited investor is someone who has a net worth of $1 million, not including the value of their home, or they make more than $200,000 a year for the last 2 years. So if you're an accredited investor, you can invest in the fund. We have a minimum investment, like I said, of $50,000 and a minimum investment period of 2 years. And both of those, I think, are fairly optimal for, again, the Bay Area, because our average loan that we write is for 12 months, and the average payoff is right around 6 to 7 months. So these are generally quick turn loans, which for a fund, the fund model actually is very, very efficient. So we don't care about early payoffs. The fund shareholders actually benefit from early
Yeah, because
payoffs.
he splits the points with the fund. So rather than like an individual deed of trust, the investor is just getting the yield. Here in the fund shareholders are sharing in those points.
And how does the fund handle the fact that sometimes there'll be more money or more people wanting to invest in the fund than can be lent out on mortgages, and sometimes there won't be enough?
Well, the way funds are set up is that all funds are set up this way. All mortgage pool funds are designed in this fashion. There are two accounts. There's the subscriber account and then the operating account. So when you first write your check to the fund, it goes into an account that does not pay any interest to you, and it doesn't earn any interest to anyone. In fact, it's a checking account, and it sits there on the sidelines waiting for an opportunity to put to use. Now, in our office, we're funding 10 to 15 loans per month, so funds do not sit in the subscriber account for very long. In fact, the longest this year that any monies have sat in the subscriber account earning no interest for that shareholder was 2 weeks. So that money, once that goes into the operating account, you're now a shareholder and you earn the yields, a share of the yields from the fund from that point forward.
And once you're in, exactly.
Once you're in, you're in.
So if you're in and a loan gets paid off, and now there's more money in the fund, it'll still be the people who've already invested in there, which will reinvest first before you bring in a new client.
That's exactly right.
That lends a
Okay,
incredible
so two
security to the investor.
Two quick things before we go to break. Mark, how do people get a hold of you for investing in the fund?
Right, so we're based in Marin County, Pacific Private Money. We're at 415-883-2150. Again, That's 415-883-2150, or visit our website, which is pacificprivatemoney.com.
And Julie, I forgot, with you, how do people get a hold of you for real estate questions?
Well, I'm based in San Rafael. My partner Natalie and I have a wonderful blog that you can visit and read all about what's happening in Bay Area real estate. And you can find us at nestinmarin.com, or you can call me on my cell, which is 415-497-8584.
Excellent. Robert, we already gave out your information.
Yep.
So just sit there and be quiet. No, I'm just kidding.
515-1941, not 1841.
Yeah, that's right. There you go. Okay, we're going to go to our third and final trivia question. Again, the theme is dog. Which one of the, or do this again. Which song by Elvis Presley had the word dog in it? 1956 hit. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Which song by Elvis Presley, his hit in 1956, had the word dog in it? Make sure to include your name, your email address, speak slowly, spell out your email one letter at a time. Don't touch that dial, because when the best of investing comes right back, we're going to be having some closing thoughts.
Did Elvis sing "How Much Is That Doggy in the Window"? Oh no, that wasn't.
Doris Day.
You're so silly.
You're so silly.
So do you have little ones trick-or-treating tonight?
Yeah, a little one, a 12-year-old, who's dressed up as a minion.
You know what?
A minion. So he doesn't know. He's too young. Minions. That's like the highest grossing cartoon
really?
movie of 2013
Oh,
was one of the Minion movies called what?
Despicable Me?
Despicable Me, yeah.
Who are minions?
I don't know anything about
They're
it.
those little, you ever been to the movies?
They're
recently?
yellow with little
White
eyeballs like this.
Yeah.
Oh,
I'm
yeah.
not those things in the
Oh
movies.
yeah, they're great.
Yeah.
You can't they talk in an unintelligible
Oh
language.
okay.
They're kind of cute. And
That's
I
the
don't
guy
know if
that
I'm going
comes out
trick-or-treating this
for,
year. I went trick-or-treating for 50 years.
Wow.
Literally.
Yeah, and you're
I
only
went
51?
Every year I went trick-or-treating, and I don't know, maybe this
For
year,
50
You're going this year?
50 years, yeah.
There we go.
Your parents
Back in
must
the
have been
80s.
healthy at a very
So
old
that's what a
age to
minion
take you
looks
every
like.
year.
That's back in the 1870s, I went as you.
There's a minion.
Did she make her
Oh,
Let's
that's
see.
costume?
great.
Yeah, well,
Oh,
mom.
that
Yeah.
is fabulous.
It's really cute.
That's great. Put her on the TV.
She's so cute.
She has to sign a model,
That's
Yeah,
true.
right. Thank you.
especially if she's a minor.
Yeah, there you go, Judy.
Okay, so let me figure out how much we got here. This could be a short one. Yeah, it's gonna be a short one.
How short is short?
7 minutes.
Okay.
Okay, Banky?
Okay. Thank you.
Okay.
Okay.
Again, one more time with the,
Oh,
look at
yeah.
that. You got the rubber
Fascinates
pencil.
me.
Did that fascinate you?
Yeah.
Fun lunch event.
Okay. Oh, yes. Okay. And then you have last minute article type stuff?
Last minute thoughts. Thoughts of
Last minute.
anything newsworthy?
Oh, bummer here?
Do you have a question for me? A reader question? A listener question? Reader.
Let's see. Yeah, I can ask you this one here.
But don't tell them.
There's no
They get a surprise.
Yeah.
No, they
Put on the
you
spot.
emailed me one.
I did, yeah. I'll send you this one. Okay, right, here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hanf, Julie Kennedy, and Robert Schiff. When we cut to the third commercial break, we asked this trivia question. Again, the theme is dog. What famous 1956 song from Elvis Presley had the word dog in it? Anyone?
Hound.
Nothing but a hound.
Yeah, ain't
Should we
nothing but a
sing?
hound dog. I told you
Nuclear hound.
that was a cream puff question. Okay, Julie, you know what? We got one more question here from someone. It says, do you have a crew of people you work with, such as cleaning people or minor repair people?
Oh, well, we have everything from mortgage brokers to carpet installers, contractors, and that's one of the services we provide to both the buyers and sellers. When you're getting your home ready for sale, you probably need a lot of those services. And when right now, actually, we have some folks that have just bought a property, and we've helped coordinate all of the various contractors, electricians, HVAC to come in. So, and people that are coming from out of the area, they don't know. So
Yeah, that's a good point.
We really act as resource referral.
That's always very nice.
Mm-hmm.
Okay. Much appreciated. I'm sure the listener will appreciate that answer.
She's got her team.
That's
We
what they
do.
got. That's why it's called
Team
Team Nest.
Nest.
There you go.
We have the little fledglings, and then
I like that.
That's cute.
NestandMarin.com.
Yeah,
That's cool.
that is very cute. Mark, you actually have a launch party, a free party.
Yes,
Tell our
indeed.
listeners about the free party.
So we
Is
talked
that
last.
lunch? Oh, lunch.
Well, you
It's
can
gonna be
have
dinner.
lunch there.
Yeah.
Well, it's
Hors
d'oeuvres. Yes.
Hors d'oeuvres.
So we launched our mortgage pool fund, the Pacific Private Money Fund, earlier in 2013, but we never actually had an official launch party. And as it was, got to be summer and then got to be fall, we decided, well, let's go ahead and have it, later and in the year after we've actually, raised some capital and did some loans. So we're having our official fund launch event at the Piatti restaurant in Mill Valley next week on Wednesday evening at 6 p.m. So if you would like to meet the team at Pacific Private Money, and there's going to be 10 of us there, as well as we have a special guest. We've got Michael and Agatha from IRA Services, who are going to talk a little bit about how you can have a true self-directed IRA and invest those IRA monies into high-yield investments like mortgage pool funds or real estate if you want. Again, that's going to be Wednesday night at 6 p.m. It's going to be for 2 hours, 6 to 8 p.m. We're going to have hors d'oeuvres, we're going to have wine, we're going to have beer. It's going to be a lot of fun. So far, it looks like we're going to have a pretty full packed house, but we would love to invite our listeners to RSVP. Please give us a call at Pacific Private Money at 415-883-2150, or again, go to our website for our contact information. Stop on by Piatti's and learn more about the Pacific Private Money Fund.
Which they have Piatti in Mill Valley. I'm sure you guys have been there. Excellent.
Excellent.
Oh, it's
we
great.
could go like the Wedding Crashers, just show up.
Well, it's upstairs. It's a pretty big room they have, and it will hold 100. And actually, I have over 100 RSVPs, but how parties go. People don't show up.
People
Stuff
forget,
happens.
they get
Sure.
sick.
Yeah, right. So there'll certainly be room there for anybody who wants to come by and show up. And again, it's right off the freeway on 101. Really easy to find in Mill Valley.
And in case they run out of food, I think I'll go trick-or-treating tonight and get some extra candy.
Well, we'll probably run out of food. We'll definitely not run out of wine because we ordered some extra cases of wine just in case. Planning on bringing some home with me.
Excellent.
Where that expression came from, just in case.
Just
Maybe.
Extra cases just in case.
We have a quick minute. Anyone want to chime in with any last minute?
I'm really thrilled that it looks like interest rates are going to stay low because I know my wife and I are going to be looking for our next home.
That's
next
definitely
year.
a help to the market, and especially because it's with other regulations coming in. It's now, as of mid-October, potentially harder to qualify for mortgages than it had been in the past.
That's right. You said that earlier
The
when we were off the air.
Yes, the government is limiting the debt-to-income ratio
Yeah.
at 43%, and prior to that, they wanted to see it in 43, but if it was between there and 50%, case by case, or depending on what lender, and even higher
But if
than
they're
that,
lowering also the conformity.
they want out of the market.
I was going to say that's
They
going to make
want,
it even
they
harder.
want Wall Street. They want to privatize it.
So low rates are a good thing. However, the asterisk is it's harder to qualify for
It's
a home
harder
loan.
to qualify, and
And
there'll
it's gonna
be
get harder in
there'll
January.
be, and there are companies that'll come in to fill the gaps for
Yeah.
people that would have qualified but don't now, and some other creative ways of getting around it. But the financing picture and the way to get a mortgage and the difficulties involved increase yearly.
This is the first time I'm hearing the government wants to get out of something rather than in our business. They want to privatize.
Some of them do. Yeah, they would like to not continue to support it. They would rather it support itself. although Fannie and Freddie were created in the government supported mortgages was created to help us get out of the depression. My understanding.
Well, I was going to say that, maybe they'll do that with Social Security too, where they'll let people take their Social Security checks and then, privatize that. But I don't think so.
I don't think so. Yeah.
That wasn't a big hit before.
It was. Okay, people, we got some thoughts for the day here. This is a little bit more on the sports side of things. Gordie Howe, remember the famous hockey player? He said, all hockey players are bilingual. They know English and profanity. And then that Hall of Famer, George Brett, he said, if a tie is like kissing your sister, losing is like kissing your grandmother with her teeth out. There's a thought I don't want to be thinking about. Okay, I want to thank my co-host, Mark Hanf of Pacific Private Money, and we also have Julie Kennedy of Marin Modern, and we also have Robert Schiff of RPM Mortgage. So, people,
Yes.
tune in next week to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions.
And make sure you turn your clocks back.
That is a good
Thank
point.
God.
Thank you for
Trying to get
reminding
that
us.
in the middle of the night.
Saturday night?
It's a lot easier turning them forward, though. You just have to push a button. This I have to unplug the thing and plug it back in. Anyway, thanks
Maybe
for
it's
listening.
time for a new clock.
On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.
You missed it.
Oh,
Hey!
You blew your cue.
I blew my cue. I'm sorry. I need to look over it next
Yeah.
time.